Welcome back to Morning Markets. We've still got our eyes on the rally, but I should say it is fading a little bit right now, especially on the Dow Jones Industrial Average. We did see big gains, of course, after the Federal Reserve interest rate decision yesterday, where they kind of leaned in to the markets thinking about a rate cut. Of course, the other side of that coin is, what does that mean about the economy, the global economy? We had the Bank of Canada kind of signal an end to its tightening campaign, as well as it saw signs of a slowdown in this country. For some perspective, we've got somebody who's got his finger right on the pulse of that, as the head of one of the largest logistics companies in this country. Let's bring in Murray Mullen. He is the chair and president of Mullen Group. Murray, thank you so much for being with us this morning.
Good morning, Amber. Nice to chat with you.
So, I mean, we can look at all kinds of economic indicators, or we can just ask you, what do you see on the ground floor in terms of economic activity, consumer health?
Do you know, Amber, we were quite surprised at how strong the consumer was staying in. Like, if we look at some of the results from, the Black Friday and the Cyber Monday and all those kind of things, the consumer was very, very active. So October was our best month that we had in the whole year. And you're seeing that from a lot of the retailers, is that there was some pretty active consumer spending going on. That's very healthy. Now, we've seen a little bit of a drop off now. I think there's a little bit of buyer's remorse and, got Christmas coming up. So our view is kind of the economy is going to kind of roll. You'll go through when there's good sales on. I think the consumer is going to be very active. If not, I think they'll only buy what they have to be honest with you. So, but that's kind of where the market's at right now. It's in a stable state. There'll be pockets of when it's really good, and then that'll be slower for a bit. But that's what we're seeing. Is the job market still reasonable? There are people that are hurting. There's no doubt that high interest rates caught a lot of people off guard, including our central bankers that had now had raised interest rates. How many times? Like 11 times in a year and a half. Now they're going, okay, we accomplished our objective. We started to slow the economy down, and we've punished people enough. So maybe we'll start to cut. And I think that needs to happen for the economy to get get a leg up, in my view, because too many consumers are trapped with high debt.
It sounds like, for the near term, you're saying things are cautiously stable. The thing about your business is you do have a sight line into what the future holds. I mean, your industry experienced a freight recession before we saw the kind of slowdown show up in the GDP numbers. So in terms of your leading indicators, what are they telling you?
Well, on the demand side, we're watching carefully on that side. We think it'll be stable. We don't think there's going to be a big boom or a big drop off. I think the consumer's, reasonably healthy. A lot of consumers are just fine, but there are some that are hurting. So it'll be pretty stable. But I think on the supply side, we're starting to see some like our competitors and people who got too much debt, they're getting squeezed a little bit. So our industry, the supply side will get squared away sometime in the next 12 months or something like that. And then the market will be back in balance. That's why we have a diversified business model, because I never know what sector of the economy is going to have a good run, or we're going to have some struggles for a little bit. But good runs don't last forever, and struggles don't last forever either. So we're well positioned for the future. That's my job, and the senior executive, make sure that we're set up to go through all cycles. And that's what we're articulating to our shareholders, and we'll just stay a steady course. And then I'll look for, just like always, we'll look for really good acquisitions that fit in our network, and we'll grow. But that's what we see. It'll be an okay market, not a growth market, but I see some opportunity as some of our competitors run into a little trouble.
Let's pick up on that point, because you have mentioned, M&A is always something you're looking at in terms of growth opportunities. You've mentioned that you're always looking at deals, but it's been a while since we've seen sort of a major or significant one. What's your threshold? Like, why are you walking away from deals these days?
Well, the number one reason is that we never believed that elevated pricing and the boom of 22 that was Fed and central bank induced was sustainable. So why I'm not going to buy at the peak of the market because there's nowhere to go but down. So, but now, expectations have been lowered dramatically because, the earnings of our peers have fallen off pretty good. But also, as time moves on, our industry is just filled with a lot of really good entrepreneurs, and eventually every entrepreneur needs to monetize their investment. You can't take it with you, as we say. So from that perspective, we just wait till we get the right opportunity. And I tell our investors, look, I'm not chasing growth, because once you get on that bandwagon, really difficult to get off it. We know what we're looking for. We know the ones that we'll target, and when they do, they'll add value to our company and to our investors.
Where are you looking? I know it's been your energy exposure has been minimized over the years, as you've said, to become a more diversified company. What's going on in energy? Is that an area that you would look to increase exposure? I mean, what sector is kind of attractive right now?
Well, it's interesting you bring that up, because that sector is actually quite attractive to me now, because that sector's been starved of capital for well over 10 years. So the competition doesn't have a lot of capital to go, and we'll look at consolidation opportunities that strengthen our market position there, and the valuations are really, really low. But our primary objective and our primary strategy is really on what we call the less than truckload, which is dealing with all the communities. And, as the economy grows and as immigration grows and families grow and whatever, they all need to be serviced. So less than truckload is now the single largest investment that we have in our company. It's our largest segment of the four that we have. And that gets my number one attention, because it's really for the long term. So once you build out that network, Amber, it's really difficult to replicate a less than truckload network. So that would be our primary focus.
Certainly in the U.S., that less than truckload business has done very well recently. There was that kind of high profile bust of a major player. From time to time, do you ever have conversations about entering the U.S. and that less than truckload market in a meaningful way?
No, we wouldn't go after the U.S. LTL market. We don't have. It would just take too much money to do it. There's already well-established carriers in that market. There are other opportunities that we've looked at. So we entered the U.S. market in 21 with our investment in Holistic, which is a 3PL tech-based company. That gives us a really good exposure with 6,000 carriers that are in our database and our network. And, we're doing like $200 million worth of business in the U.S. with this 3PL business. And that will be our growth platform. The asset-based business, Amber, that's a very, it's a very competitive market in the U.S. So you got to be, in my view, you got to be careful, what sectors you want to join in. And we really like the 3PL and the technology-based platform. And then from there, you never know what will come when we see really good ideas that come out of that.
I really do have to go, but I want to ask you one last question, even though my producer is going to kill me. The labor market, I always ask you, how's it feeling right now, the wage pressure, ability to attract employees?
Yeah, there is no real wage pressure now. What we'll do is we'll make sure that, we help our employees with inflation, but there is no elevated wage pressure now. That market has stabilized quite rapidly.
All right.